An earnings beat not enough to satisfy investors in Pfizer. Pfizer reporting better than expected fourth quarter results, but the stock continues to be under pressure on concerns that after COVID, there is no new growth story. Now, many do suspect that it will be cancer treatments, I should say, after its huge acquisition of Seagen, but that's proving to be more of a wait-and-see story. Our next guest does have a buy on Pfizer. Evan Seigerman is managing director at BMO Capital Markets and joins us now. Evan, what are we going to do about Pfizer? I mean, nothing seems to move the stock higher. What was disappointing in the results, even though there was a beat?
Right. So the actual earnings number, not so much of a surprise. We got pretty comprehensive updated guidance last year, and we knew what they were going to guide for 2024 on their December update call. I think the disappointment came from a few places. One, Prevnar was weaker than expected, down 7%, which is one of their kind of core, not growth drivers, but core kind of cash flow stable business items. I'd also highlight that there were a number of write-downs. Kind of later in the call, the CFO talked about a write-down to estrasimod. This is the asset that they acquired when they bought Arena back in 2021. So a lot of the acquisitions aren't necessarily panning out. I think to your point, it's all about cancer, right? There's a huge focus on making Seagen work. Whenever I talk to management, I'm always make Seagen work. They have about $3.1 billion in sales from Seagen this year. It could be a little higher than that. I'm especially bullish on Seagen following the EV-302 data that we saw at the ESMO meeting back in October.
And just remind us in kind of plain language what that is and what it could mean for growth.
Yes, exactly. Sorry about that. All the lingo. EV-302, a big bladder cancer trial. It's seen as practice changing. So this is used in the front line in patients who have metastatic disease. It's a big deal, right? This got a standing ovation at a major medical conference, which rarely happens. It could be, I don't know, upwards of $5 billion in potential revenues that weren't factored in when they bought the asset. So it was an upside surprise. That's going to take some time to pan out, but there's a lot of enthusiasm around that. I'd also highlight that ADCs, or antibody drug conjugates, are the hottest thing in cancer. We've seen a lot of acquisitions in the space, not just Pfizer Seagen, but also recent deals from AbbVie, a deal with Merck and Daiichi. So a lot of focus there as kind of the guided missiles for oncology.
It's such a tempting stock, right? 12 times earnings, more than 6% dividend yield, cheap, cheap, cheap. Is it becoming a value trap?
It's hard to say, because I think in my coverage, I have two value trappy stocks. You have Bristol at 7 times earnings and Pfizer, as you said, around 12 times earnings. I think the key is that the dividend is safe. This is a key component of capital allocation. And every time I press Dave Denton, the CFO, he reminds me that the dividend is safe. This is very important. I think there could be some stickiness, but I don't think it's quite a trap. I think Seagen really needs to flourish a little bit. And I'd like to see commercial uptake of a lot of the assets that they bought. Like, let's get some focus, and with all these acquisitions, see that top line growth come through.
Do they need a new CEO?
That is a tough question. I think, that's a tough question. I think that right now I want to see Seagen move forward and really become part of the business, and changing CEOs at this moment would be very disruptive. There's a new leadership structure in play. Maybe give it a year or two, but I think right now, no more changes. Let's see the execution happen and then come back and we can make that determination.
You know that all of the oxygen has been taken up by these drugs that are working on diabetes and obesity, and you're there as well, right? So while you're kind of picking some of these lower multiple stocks like Pfizer, like Merck, which you also have a buy on, and that one worked. Eli Lilly, you're still sticking with that one. At what point do you think maybe it's going a little too far?
So Eli Lilly's a special case because right now it's the launch year of Zepbound, a lot of enthusiasm around that. That's what we're so bullish on. We think that really drives the narrative over the next year. Another obesity play that's at a more reasonable level is Amgen. They have a bunch of obesity assets, two of which AMG 786, a small molecule undisclosed mechanism, but we get data on that earlier this year, and AMG 133, a longer-acting kind of peptide drug. So think a tirzepatide or semaglutide, but could be once monthly. Data is coming later this year. I look at this as the obesity at a reasonable price play.
and just to bring it full circle, this is also something
Sure.
in pill form that Pfizer is working on. Any hopes for this?
Yes. So this is right now, we had data from danuglipron as a twice daily back in December. The drug worked. The tolerability was not great. They're going back to the drawing board a little bit to reformulate it as a once daily. And I think that's what could make it more tolerable, make it competitive with the likes of Lilly and Structure Therapeutics. So it's a wait and see. It's a driver from sentiment, but people are anxiously awaiting, but it's not going to pop the stock in the next month unless we get a really positive data update.